The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and good morning to our friends in the Southern Hemisphere who are here with us. How's the sound, folks? Terry doesn't seem to be on Skype for me today, so if you could just type into the questions box, let me know that you're hearing this all right. Good. Mark, you're the first one. You're the quick man on the fingers, eh? Good. And John. And Ahmed, everyone. Okay, so sounds good, James. That's good. Justin. Well, welcome, everyone. Lovely to have you all with us. Chase, nice to have you as well, as always. Pretty important tutorial today, folks, webinar, I should say, because we had this massive gold trade during the week, and whilst my guys who've actually done a tutorial were all over it and yodeling and happy, some of you didn't get the trade. And Tom in Florida, nice to have you with us. You were one of them. So I'm actually going to go through that trade, excuse me, and in some detail. And I'm going to show you most of what you needed to know. There was about $7,500 in that trade per one contract. Also going to show you silver for the last month. There's been 16,000 per one contract in silver, and somewhere between 10 and 14,000 per one contract in all of the GBP pairs, all of which we've had. So if you like making money, this is the place to be, but I do add the caveat that what we give you at the website are not all of the signals, and even though we provide these signals, you then have to know how to trade them. On the website, we have suggestions, which are fairly defensive. It's really designed for people who haven't had a lot of experience in trading, but for you guys who are pros or in the business, you really need to know, like Kenny Rogers said, when to hold them and when to fold them. And it's the holding them that makes the big money, as I'm going to show you today. So welcome all. Thank you for being here. Gee, I'm thrilled. We've got a couple of girls with us today. This is fantastic. We don't get many girls, but met Alan, Albert. Yes, great to have you with Alice. Alice, welcome, Alice. Welcome, Alice. Boyd, my friend up there. Hey, Boyd, you don't want to be worrying too much about that stuff you sent me, mate. That bloke that you spend your time reading. Just hold the line a moment, folks. He's in a different business to us, mate. He's in the business of sensationalism and clickbait and all of that. But I don't think you have to worry about it. But I got your email this morning. Ahmed wants to talk about 2 minutes. Talk 2 minutes about natural gas, inverted cycles, etc. Will, if I get to it, Ahmed, I'm happy to talk about anything that you guys want. If you can send me an email a couple of days before. And the reason for that is that I have a number of computers, and not everything is on this computer that I use to do the webinars, Ahmed. So if I don't get to it today, just send me an email, please, jneedham@thedanielcode.com, Needham, like Needham, @thedanielcode.com, and I'll be more than happy to deal with it next time. My friend Brian up at WeWar's with me. Nice to have you with us, mate. What have we got? We don't need that. We need Dex. Dex, haven't seen you for so long, my friend. Lovely to have you with us. Don up in Canada. Chip, God, nice to see you, mate. Hank and Justin, I guess. Harold over in Reading. Oh, so many people today. This is fantastic. Great to have you all with us. Johnny Barnes up there in Canada. John L. Lisserman down in Coffs. He's a bit of a star trader. He's going to be. He's a new tutorial guy doing very, very well. So is Justin. He's another one that's going to be a star. My friend Louis in Switzerland. Louis, must be early morning for you, like I guess about 1 or 2 o'clock in the morning. It's good of you to leave the party to come and join us today, mate. Mark, we've got Marilyn with us. It's great. Mike Mitzler. Mike's our gun trader in Chicago. He's the dentist. He's a super trader. Did a tutorial last year. Mike Murphy. With too many people today to say hello to everyone, but welcome, folks. Norbert, welcome to you. And we've got a really big turn up. Rob H., my mate in New Zealand, very clever analyst. Rob is, goodness me. Sue, happy to have you with us, Sue. Let's hello to the girls. Vicky, nice to have you. I can't keep complaining that I want to have more girls and not have them. Anyway, let's go on, folks. We've got a whole lot to talk about today. Let's just move on from here. I've called this all the gold in the vault, because these gold trades, when they come, boy, they're a great source of money. And we had, of course, the gold and silver all on every signal you could have possibly wanted, a whole lot of money, but you did have to know how to trade it. You guys who haven't done tutorials, I can see that you're struggling. All I can say is, please, if you want to be a serious trader, make the effort to get to a tutorial. Our next tutorial, we call it Summer Down Under, is on beautiful Waiheke Island in the Hauraki Gulf of New Zealand. That's about a 20-minute ferry trip from Auckland, where you fly into in New Zealand for the tutorial, 4th to the 7th of December. And also this year we're also offering for you to do it, if you can't make the trip, to do it by video. We've had just recently, we started doing these as video sessions for people who just can't make the trip. John Listman's one of them. Quite a lot of these other people here with us have done this by tutorial. And it's very, very good. We've got some absolutely fabulous traders who've done the tutorial by the video conferencing method. And it's worked terribly well. So we're offering that as well from the... You can make your bookings from that. We're going to make that available from 24 October to the 30th of November. We'll talk more about that as we go through. Basically, the Danielcode's a proprietary set of ratios to control time and price, and that allows us to do some pretty amazing things. So, hey, Tony D up in Chicago, good to have you with us, mate. So let's start with your choices. We trade a huge range of markets, equities, US equities, DAX, T-bonds, gold, copper, oil, silver, the softs, natural gas, sugar, soybeans, natural gas, which Ahmet's interested in. I'll try and get to that. A pretty big range of markets. So, you've got all those choices. But the first choice you have to make is your trading style. Now, I don't wish to offend anyone here ever, because people have their views, and all views are valid. Let me make sure that this screen has changed for you. Yes, it is. Basically, there's a range of how you can trade. Long-term trading is very popular with people. They like to, I'll get often asked about long-term trading. Look, it's okay for equities in bull markets. Equities, in my view, are very much a manufactured market. You may not understand why that is, but quite frankly, the marketing that's done for stock exchanges is pretty close to a fraud in my view, because what actually happens with these indices, the big indices, is that companies that go broke, become insolvent, or even if they don't trade at a certain price level for a period of time, they're taken out of the index. They're removed by the promoters, the people who name and run these various indices, the Dow and the Russell and the Dow, the S&P 200, the share price index in Australia, what have you, NASDAQ. And companies that don't perform or don't trade at a certain price level for a period of time are actually taken out of the index, and they're replaced with the new hot thing coming up. So that's why I say they're manufactured markets. A lot of that, in my view, works on the greater fool theory. I don't have a great deal of faith in company accounts anymore, with the various ways they've got of reporting. I've been the chairman of 2 public companies myself, and I know how auditors, I don't wish to defame anyone, but to a large extent they have a real problem understanding the business, and they're reliant on senior management to brief them. But Bear in mind that equities are manufactured markets. Long-term trading's fine for them. When they get into trends, they go on and on and on forever, as we've seen in the big indices since 2009. The next thing people want to talk about is swing trading. Swing trading means that you have to have a view, and the fallacy of having a view. Dennis Gartman, probably the best known newsletter writer in the business. Absolutely, in my view, hopeless. But anyway, this is his latest statement. He missed the gold sell-off altogether, commenting on the biggest gold slam. Dennis Gartman said he has wounds to lick and heal, adding, what can one say other than we truly didn't see that coming? And I mean, I just don't get it. It was so obvious on the Danielcode chart signals, but Gartman's not a subscriber, so I guess he didn't get it, nor did his tens of thousands of followers. So these guys aren't actually traders. They're opinion people. They do claim to be traders. I guess they certainly use all sorts of interesting measurements, but our stuff is just so simple when you know how. The other thing people ask me about short-term trading, 3-minute charts, 10-minute charts, what have you, flat every night. I know people have a degree of paranoia about their stops getting hit overnight and all the evil things brokers can do. And I don't totally discount any of that, although, I'm not sure the brokers have any control over it myself. But with all those methods of trading, they're really not the most profitable way to trade. With your long-term trading and your swing trading, you don't get a big turnover of your account. Now, most of us have limited accounts, and the more you can turn that account over and utilize it in a number of different trades, you're going to do a whole lot better. So you just take the proposition you have one trade a year, and maybe it makes 6 or 8% a year. You can be trading the Danielcode 1 to sort of 8-day swings in futures. You can make that in a month pretty easily. Because you're turning your money over. You get a multiplier effect by being able to use your account more often. So, I don't want to be critical of anything else you folks like. If you're mad 3-minute traders, good luck to you. But it's not how you make the money. I've been at this business for 30 years, and I've tried everything. I mean, if it's been talked about, breathed about, or conceptualized, I've tried it. And honestly, the most money is made by trading off daily bars. We get 1 to 8-day runs, multiplies your trading bank. You're always with the trend, and that's the big secret. Finally, I've got to have a call out to Frank DB, who was a student of mine in Taupo a couple of years ago when I first started teaching the fourth seal. It's a forward form of analysis. He became completely obsessed with it, did all the big work on it, and has become just a marvelous fourth seal analyst. Let me come back to that. James, your quick question, is this being recorded for later viewing? It is, but it's not going to be available to everyone, James. We're going to get into some very detailed stuff on trading in a little while, and it's only going to be the whole webinar will only be available to Danielcode members. So if you're not a Danielcode member, I suggest you stay with us. So Frank, anyway, a charming young man from Belgium, got really involved in the fourth seal analysis, and he actually helps me with the analysis. He does most of it on the fourth seal, and it's just been brilliant. And we're going to have a look at his analysis on gold as we move through this webinar. It's been extraordinary. He's picked every turn. Kurt, I think you were asking about the Huey, and Frank has absolutely, he nailed the lows and the Huey pretty well to the day, and he hasn't been wrong since. So those of you who are interested in long-term forecasting and future forecasting, have a look at the fourth seal on the Danielcode website. I'm going to show that to you as we move through. Particularly gold has just been sensational. Okay, so here we are. This is a chart of gold, which I want to talk about. and you'll see the heading I've got on this document is "And Commodities Collapse Led by Silver and Crude Oil. They missed gold and used the comment rigged." Now that actually comes from December 2014, but I was amused to see that in one of our old videos, that of course they're saying exactly the same thing. We always have these maniacal gold bugs who, nothing wrong with being a rational gold bug, but we have a fair number of maniacal ones out there who only contribution to the cause is if it gold goes down, it's rigged. And if it doesn't get to 10,000, then it's manipulation by the banks. Absolute stupidity. But I wanted you to just have a chuckle at the big sell-off we had in gold in December 2014. They're saying exactly the same thing then as they're saying now. You know, it's just crazy stuff. Let's see what we've got here. I showed you a fair part of this chart a couple of weeks ago. And asked the question, why did markets make the turns that it's made, and more recently, why make a top here? And I was pointing out to you the Danielcode blue lines and the buy and sell signals that are generated. And the Danielcode is quite unique in that it has the only precise measurement system that I've ever seen. These markets are attracted to these blue lines and the retracement lines. They're like magnets to markets, and they're pretty much secret. We're a very, very small business. We don't promote or market, and we have a very small number of members. So, you know, not a lot of people know these Danielcode numbers, so it's certainly not mass psychology. But I've been trading this stuff now for, I guess, at least 15 years, and despite everything that happens in markets, high-frequency traders, scandals, rorts, markets keep doing the same thing. They run to these Danielcode numbers, they turn at the Danielcode numbers, and that's the only place they turn, and it's quite extraordinary. So let's move on, and I think I've cut this down a little bit. I want to show you the same trade in silver before we get into the heavy analysis of inside gold. This is the same trade in silver, and you can see, I'll just bring up the chart on the other computer so I can be accurate about dates here. You can see that in silver, it was a much easier trade, incidentally. Silver was pretty easy, right at the high, which was 0922. That's the the lower high, the more recent high. We had a T.03 sell signal, then the market went down 1, 2, 3, 4 days. We had a T.03 buy signal, the market went up 2 days, and then we had a plus sell signal, and that got the rest of the run down. So we had a loss of $650 on the buy signal that never got to give us a profitable close, but apart from that, we had $10,500 in profits in those run down, bit more actually, 7, 10.5, 12, 13 odd, $13,500, another 36, say 17, 18,000 less the loss. So that was the trades in silver. Let's start thinking about that for a moment. 16,000 per one contract in silver in the past month. You do have to know how to trade to get it all, because the signals at the website just start you off, but it's the knowing when to hold it and knowing when to exit that makes the big money, as you can see. Now, I often say to folks that a whole lot of trading is like unarmed combat. You're battling with the stops, you're up, you're down, the markets aren't trending. Or if you like, it's like offshore long-distance ocean racing. You have 90% of its periods of some enjoyment, but also a whole lot of boredom, punctuated by 10% of absolute sheer terror. And trading's like that a lot of trading, when markets aren't trending, you're up, you're down, you're long, you're short, you're battling with your stops, you're battling with the trades. And then when the market finally got everyone wrong, that's when it gives you the big result. And that's what happened here. And I'm going to show you this absolutely bar by bar in gold. So this is silver. The silver trades very much the same, but a little less complicated than the gold trade. But I do want to make sure that you folks who didn't get these trades understand how easy they are to get. For those of you that are new to us, you'll see that I have signs on these charts saying T03 buy, T03 sell, plus buy, plus sell, blue line buy, sell. And we create those signals for you. And this is actually this is old. This is way back in 2012. Just happened to be a snapshot that I had in the file. And this shows you our Danielcode trade program. And for each of these signals, they actually go into this program, which you access when you're subscribed to the Danielcode or you're a guest having your free trial. And for every day, it shows you what markets we have signals for, what the code for them is, whether it's a buy or a sell, exactly where to put your entry, where to put your initial stop loss, if necessary, if you're a new trader, where the first target is, and whether those trades are correlated. As you go in that page, it's interactive. You can type in the number of contracts you want to take, then press the reset button. It'll churn around and tell you exactly what the dollar value of your risk for each individual trade is. So you can then adjust that to make sure that you are within your risk parameters. Okay, let's start looking at this trading gold with the Danielcode, Tom. And the real answer to this is trend. Now, trend is everything in trading, and one of the key points about the Danielcode is that I teach you how to spot a change in trend way before anyone else can see it. And we have various methods of doing that, which I'll teach you at the tutorials. Either come along personally, or we can do them by video if you're unable to make the trip. Always prefer if you make the trip, because I enjoy your company. I love meeting our members. We have a great time at these tutorials, but I realize it's hard for everyone to get away when we need them to. But one of the many things I teach you at a Danielcode tutorial is how to spot a change of trend, how to define trend before anyone else can see it. That's the key to all parts of trading. Because when you're with the trend, you want to hold on to that trade. You want to use a trailing stop of some sort. We have many, many options to do that. And once you're against the trend, you need to be much more aggressive on your profit taking and your stop loss management. But this is gold now, and for those of you who missed this trade, we're starting to look at the little inside bar in the center of the page, which is that's 0923. Now, believe it or not, that's the first sign of a change of trend. And the untrained eye, you're not going to see that, but that is arguably the first sign of a change of trend. Now, let me be absolutely clear what I mean by arguably. When we trade markets, we are trading probabilities. There are no certainties in markets. We can't forecast what the market's going to do tomorrow, and we don't pretend to. What we do say is that we know this trading business so well when we can define it with the Danielcode numbers and the Danielcode ratios that we can say, if the market does this, then you should do that. In other words, you've got a T03 sell signal for that day, which is 0923. You put your order on to sell it. Now, if you're an aggressive trader and you've been trading for a while, you can sell the low of the inside bar. That itself is actually a losing strategy, and I actually teach people, particularly people who are new to this business, and I teach a lot of people who've never even seen a chart before, and they do very, very well. I teach them to sell the low of the last bar that was not itself an inside bar. But as you get better at this business and more confident, you can tighten up your entries and you can sell the low of the inside bar. But when that inside bar finished on 0923, I doubt if there was one person in a million who knew that there was a change of trend there, but there was, and that's the first sign of the change of trend. Excuse me, and that's a probability only. Okay, at that stage it's not a very high probability, but it's the first sign of the change of trend. So we put our sell signal on, which if you're an experienced trader is 2 ticks below that inside bar, which would be 1337.2. If you're not an experienced trader, you'd put your order on below the low of the last bar that was not itself an inside bar, and you don't get elected. But at least you should know the probability is that the trend is down. So we now move on to the next chart, which should have changed for you. And we look at the next bar, and that's that outside bar, the grey bar, the outside bar, which is 0926. By the time, and it's the bar that's now in the red box, by the time that bar is completed, that is the second sign of a change of trend. Now, folks, you have to bear with me. I knocked this together very, very early this morning, and there's a couple of typos in these charts, and I haven't been able to go back and fix them. It doesn't really matter very much anyway, but this says second sign if change of trend. Well, of course, it's second sign of change of trend. But now you've had 2 signals of a probable change of trend, and the probability has now moved to a 59% probability that the trend is down. So on the balance of probabilities, we think the trend is down. Now, this is vital, Tom, for you guys. You know, I know that you're the most experienced, knowledgeable traders in the world, but if you don't understand how to see these changes of trend, you're never going to make the big bucks that are the wonders of trading futures markets and currencies. So by the end of that day, 0926, we'd had a T.03 sell signal that was elected. Whether you got into it or not, if you didn't sell the low of the inside bar, because you're following my imprecation of sell the low of the last bar that was not itself an inside bar, then at least you should know that the trade was technically elected on the chart. Even if you didn't get filled, we have these barriers and buffers that we use for safety, but the trade was still elected even if you weren't in it. So you've got to sell that low the next day. But at that stage, 0926, you should have known that the probability was that the trend was down. Okay, and if you didn't know that, send me an email and do the tutorial in November by video, or come down to New Zealand 4th to the 7th of December, and I'll show you how. So let's move on now. I told you I'd do this bar by bar. Excuse me. The next bar, the one that's showing now, is Tuesday 9/27. This is the bar that's now in the red box. Okay, and that bar has completed, and that's your confirmation of the change of trend. The probability is now 74%. The and should be a percent sign. Your probability is now at least 74% that the trend is down. And if you know what the trend is, you can hold the trades that are with the trend, and you can be aggressive on exiting and managing the trades that are against the trend. If you come to a tutorial, I'll show you how to do this exactly and precisely. There's no guessing. It's all light switch solutions. It either is or it isn't. And if the market does that, then you do this. That's how we work this stuff. And you can see by the numbers on this chart at all of the previous turns just how precisely these markets turn at the Danielcode numbers. And the corollary of that is that if they're not at a Danielcode number, they won't turn no matter what other indicators are showing. And that's the point that people miss. So by this date, we're up to 0927. The trend is down. We've got a high probability of being correct on this trend. Remember, we can always be wrong because we're only ever dealing with probabilities. And then we move on to the next couple of bars. Now, Why did this market crash through here? This big orange slash across here is where all the stops were for the swing traders, okay? Those guys like Mr. Gartman and his poor bloody clients who didn't see it coming. This is where the swing traders have their stops. And other people's stops are fuel for your trade. If they're long with a selling stop underneath that, that's just going to accelerate the trade when the market gets into that area. When this nice little mini crash happened here, there were tons of articles about it was the US dollar. It wasn't. And I know the dollar's rallied very strongly since then, but these signals were generated way back on 0922. That's when this whole sequence starts. But be aware where the swing stops are, swing trader stops. If the market gets into those stops, it's going to accelerate, it's going to run. And that's exactly what happened here. We have another, for those of you who didn't see the trend being down, this is a template from our GMAJ trading program, which all my tutorial folks know about. And it's been saying that the trend in gold has been down since 0811. So, you know, what happens when this is a much slower form of trend? What happens when you get lower highs and lower lows in a downtrend? Lots of excitement, and so it was. That was just another way of showing. So many ways that we teach you of determining trend, but here's the big key. So let's move on. I'll get my highlight bar to make this clear here. Spotlight, I think it's called. Here it is. So we were short under here. We either sold, depending on how aggressive you are as a trader, you either sold on 926, or if not, you sold on 927. And the market then moved down, trend is down, trail the stop all the way down. And we should have known that by, as I've just gone through and shown you, by 926, you should have known that the probabilities were on balance that the trend was down. And nobody else, of course, saw that. So down it came, and we ran down to this bar here, which is going to be 0930. And for this bar here, we had a T.03 buy signal, which was elected. It's elected. By elected, I mean that it moved to the point at which we say the trade should be executed, which in this case is 2 ticks above the previous bar. So this trade was elected and then reversed and went down and made an outside bar. Now, outside bars are not as uncommon as I'd like them. They're a net losing thing to almost all traders. But the point about outside bars is that you must do the stop and reverse because it's directing you to the trend. So we were long. We bought the high of this bar, which is 0929, and then the minute it traded 1 tick below the low of that bar, we had to be short. That's the on the bar of 930. So we had to do a stop and reverse sell and be short at the close. Now, there are various ways of minimizing the losses. If you have that buy there, it's clearly against the trend. The probability is that it's going to fail. That's the balance of probabilities. So we have all sorts of techniques for how you can minimize the loss when you're trading against the trend. But for this purpose, we've just assumed that you took the whole loss and got short at the end. So those of you who've been with us for a while will have seen previous videos, and you'll have heard me say many times, you must do the stop and reverse with the outside bar. Now, some of you I know just can't do it because you're working. You're not able to look at your chart every few hours. And for those of you who can't, you just get stopped out. And that's the reality. And then, you know, you need to get back in. The trend is down. So the sequence here is the stop and reverse. We're short at the close of this bar, 0930. Okay, so then we Can't move anything without the right drawing tool. So now we can. And we talk about managing stops. Now, for the shaded areas on this chart, which I think has changed now, you can see it, those are the places where you should be using a trailing stop. And there's many ways of doing a trailing stop. I use a very simple trailing stop, usually just a 2-bar trailing stop. If you want to, and what I know has become popular, is you can work on the assumption that if the market is trending, it will not correct more than 1 to 3 days. And you can allow 1, 2, or 3 bars up in the opposite direction. Now, I don't do that because I find these Danielcode signals are so accurate that you just get blown out of the water. But if you're comfortable with that, you can. The point I want to make, though, is that on this bar here, this outside bar, the alternative was that you could use a 2-bar trailing stop. And if you had a 2-bar trailing stop, let's make sure I'm on the right contract here, the December contract, the high of the 2-bar trailing stop was 1331.1, and this outside bar went to 1331.5. And you can see why I put those numbers there, that even if you had a 2-bar trailing stop, you got stopped out. So the T.03 buy signal went far enough to stop out a 2-bar trailing stop before it reversed. And why you get outside bars is that in a balanced market, and everything we do assumes these markets are balanced, you have time and price that creates a reversal signal, either a T.03, a blue line trade, or a daily trade. And the market understands that. It starts to make the turn, and it elects the turn. In other words, it'll fill you on the long side, but then an additional force comes into the market and sends it down. Albert Zaliuska, so where did the probability number of 59% come from? It's a Danielcode number, Albert. If you'd like to read all the articles on the website or watch the videos, you will see where all of these numbers come from. In fact, under the articles tab at the Danielcode website, there's a audio tape called Live at the Springs, which is part of a tutorial I did several years ago, and that will tell you exactly where these numbers come from, and it's pretty amazing stuff. So it's always, I know, Albert, it's easy to ask the question, but it's all there. If you read, you'll see it all. Okay, so we're moving on here. And the point I was trying to make is that on that outside bar, which was 0930, if you decided not to take the buy signal against the trend for any reason, if you're one of these guys who were prepared to let it have a counter trend, a 2-bar stop got stopped out. So a better solution was to take the buy signal, but to manage the stops better than I'm showing here. I've managed the stops the worst way here, so we don't overstate the profitability of this trade. So we're short again at the close of 9.29, and the market moves down, and then it gets into that orange zone where all the swing traders stops are, and boom, that's what propels it. It goes nuts. We get this massive bar. It's quite wonderful. Now, for most of you, you will have exited on that big bar, because I teach you that when you get these massive bars, first of all, use a trailing stop if you see them happening during the day, because they do have a propensity to reverse rather savagely. But if not, when you get these huge gift bars, it is legitimate to say thank you and exit the trade. Mike, your question, how do you get back into the trade? Well, you have to use a dollar trailing stop, Mike. The problem is, once these bars have gone, to re-enter the trade, the real place, the only valid place, the only true support and resistance on charts are Danielcode numbers and true highs and true lows. And you can see they enter in after this big down bar of 10.04. If you got out at the close of that bar, as I've told you to do, when you get these gifts from the trading heavens, you say thank you very much, and then just take your money. If you did get out and you want to get back in and sell it again, where do you put your stop? Well, you can't put it at the high of 10.04 because your risk is just massive, way outside your risk parameters. You can't do that. So all you can do is use a dollar trailing stop or a fixed dollar stop. In other words, you can have a look at what the average daily ranges have been for the last 3 or 6 or 9 days, whatever you like, disregarding that big bar, and that would be your normal risk on entry. Express that in dollar terms, and if you want to sell that low of the big bar, you can use a dollar stop, a fixed dollar stop, because you certainly can't put your stop where it should go. So that's how you re-enter if you want to. So let's move on. So then we get another 1, 2, 3 days down, a little inside bar, another down bar, and finally we get, if you're not out already, by this time we get a T.03 buy signal for today, Thursday, and that has been elected. So Tom, you and your partner, David, that's how we trade this stuff, okay? Come down to New Zealand, I'll teach you how to do this on every market, or you can do it by video session. I think we tried to get you to come to a tutorial earlier this year, and you were just, I know you guys are terribly busy, but there we are. Anyway, also, Tom, glad you escaped the hurricane. Tom was down in Florida with that horrible hurricane came through. Okay, so James says, I'm glad you're long again. Yeah, we're long, but what's the trend, James? How long will we be long? If we know the trend, we can determine whether we should be long for long or long for not very long. Oh, long forever. You're a gold bug. Good on you, mate. There you go. So we'll look at the fourth seal. Frank's looking for the turn as well. Everyone is. Okay. So knowing the trend before others is everything in trading. And these trades made some part of $7,000 per one contract in 5 days. They're the last group of signals we've had, just to give you an indication, running from the buy signal on September the 19th. A lot of money. That's 7,000 per one contract, some part of it. More than double that in silver. I think we had a bit longer review period. But, you know, that's huge money. That's 140, 150% on margin in a 4 or 5 trades. But to get those sort of returns, folks, you've got to know how to take these Danielcode signals, and you've got to know when to hold them and when to fold them. And that's the Jesse Livermore, Tim Halbert, New Zealand, 4th to 7th December, Tim. Shoot me an email if you would, if you want to come, because I've got to make bookings and stuff. I'd love to see you. Jesse Livermore, the famed Chicago trader, said the money is made in the long run. And he was a big old-time swing trader, made and lost several fortunes. But the point to remember is that Jesse Livermore killed himself by blowing his brains out outside a toilet in his club, and he was broke. So, you know, big risk, big loss, big wins, big risk. Don't do it. Trade the way I'm telling you. It's the safest way I've ever seen of trading. Yes, we have losses. That's part of the business. And what we say is I was right and I lost money. But as long as you're taking the correct signals all the time, you have to know how to create the signals, and they are created not only on price, but also on time. And the time signals, as our tutorial guys will tell you, are just absolutely sensational. Wonderful. So let's have a cup of coffee for a moment and move on. Yeah, it's certainly been great trading. Boy, it's been wonderful. What I'm showing you here, once your charts have changed, folks, is this is GBP, British Pound Chief, or Swiss franc, if you prefer. And all of these British pound, all these GBP markets are correlated. So you could have done much the same thing in GBP, USD, or any of the other pairs. They're highly correlated. We cover GBP Chief, GBP JPY, and GBP USD. But this is our other signal. This is our service we called our Pro service. We have available for subscribers either our T.03 or our T.03 PLUS signals. And in the PLUS signals, it comes with our Pro service, website Pro it's called. You get the blue line signals and you get the plus cell signals. They're not T.03 signals. They're the next degree of signals past the T.03 signals. And you can see on here there's some part of about $12,000 in this last rundown in the British pound. That's per one contract. Extraordinary, wonderful money, and awfully simple. We had a blue line sell signal to start with. With the day that trade was elected, Tom, the one that's in the red square, that bar turned the trend down, and we have methods that you can measure that precisely, exactly. And it's not a question of do I think this or do I think that. It's all mathematical. Either it is made the signal or it hasn't made the signal. There's no discretion about it. And once you realize that that bar turned the trend down, then you would be prosecuting the sell side of this trade as long as is possible. And you can see then that we had a one-day rally and another plus sell. We started with a blue line sell signal, one-day rally, then a plus sell signal, 1, 2, 3, 4, 5, about 12 or so days down, 2 days up, just a counter trend. So it listed another plus sell signal, and down it went into the lovely big crash. Now, on that big crash bar right at the end of there, when you see that happening, you get these super huge bars. Put a trailing stop on it, quite tight. Pick your value. Is it $500, $1,000, less, whatever you like, but put a dollar trailing stop on it, because these super huge bars have a nasty habit of punching back on you, which is what's happened in the British pound pairs. So that's showing you the alternate signals, that all those trades in GBP, and you could have used exactly the same signals in any other GBP pairs. All these markets are GBP are correlated. Then they came from our Pro service. It's called Website Membership Pro, I think. We'll look at that when we get to the website. And this is UST bonds. This was a really, really simple, great good trade for you guys if you knew how to trade it. And I suspect that most of you didn't, because you wouldn't know unless you'd done a tutorial. If you think I'm pushing the tutorials, I am. I get frustrated when we create these sort of signals. People don't know how to trade them, and then they get disappointed. And I just want to see you, rolling in the money, all the lovely lolly in the world. But you have to know how to trade, and it's not something you can learn for free on the internet. And as I've proven to my own dismay over many years, it's not something you can actually learn from books either. And being an attorney, of course, I started off in this business thinking, well, you can learn everything there is to know from books, but not in this business. Okay, so 0928 came, that's the high bar, and that created a plus sell signal, which was elected the next day. It was elected on 0929. That was the Thursday, and we didn't have a profitable close, which was one of the first conditions we were looking for. And then we had this nice outside down bar right here, the grey bar here that's in the red box, and that is 0930. Now, when that bar was completed, Tom in particular, I don't know if you guys trade T-bonds, but it's the same for all markets, irrespective. When that bar was completed, that was the first sign of a change of trend. In other words, the probabilities had now shifted to the fact that the trend was down. And that means hold the trade. And there are various methods of doing that. The next bar gave you a probable waterfall sell confirmation, something I teach at tutorials. All you guys run away and say, oh, gee, it wasn't. It was nearly there, but it wasn't. Well, It's one of those ones that depends just how you construct it all. But it was a probable waterfall cell confirmation, which is one of the signals I teach, which shows you it's going to be a bigger move than average. We don't say it's going to be huge or wonderful or anything else. We simply say the probabilities have switched to it being a bigger move than average. And then down it went. You had no worries. You could just run the trailing stop down as long as you liked. Until we got to the buy signal for today, which was a plus buy signal, and it was elected, and you're out of that short trade, $4,500 per one contract, for not a whole lot of work. Pretty nice. Okay, so let's move on. I see your questions coming in, folks. Just type in the question box anything you want me to talk to you about. And I'll deal with it when I finish this. Our Summer Down Under 3-day tutorial, 4th to the 7th of December. It's on Waiheke Island, New Zealand. Fabulous. We've been there twice before. It's absolutely great. Or we're finding very popular for people to do the video conferencing. It's exactly the same tutorial. You learn exactly the same material. And to do that, we have 4 by 2 hour sessions, one-on-one with me. You're just on your own with me. And then once we've done that, then you have 4 1-hour follow-up sessions with whoever's in the group. We do these video tutorials only around the time that we're doing the live tutorial. So we get the group together for the follow-up sessions. And then at any time, you can ask for a one-on-one session. Go through some of the trading you've done, some of the sim trading you've done. Could it have been done better? Was there an alternate way at looking at it? And so on. Here you see we've got one of our tutorial guys from December last year who did his video tutorial in about October or November last year, has only just done his one-on-one with me last week. So, we don't abandon you. We don't say, well, we've done that, see you later. We just keep working with you until you're confident that you're executing these things as well as you can. Because, quite simply, I just don't know a better way to trade. And I've seen everything. But if you're interested, folks, please, either in coming down to our 3-day tutorial at Waiheke Island in New Zealand, or doing the tutorial, tutorial by video, I should say, please email me promptly, jneedham@thedanielcode.com. Let me know if you're interested. Hui for Kurt. Boyd, yes, I'm coming to that, mate. Let me know, please, if you're interested in doing a tutorial, whether you're coming in person, bringing your family, friends, etc., or whether you'd like to do it by video. Please let me know so we can slot you in. If you're not already a member of the Daniel Code, we're happy for you to do a free trial. And if you don't already have a software program, you want to start trading, learn to trade, step up the next level, whatever, you can please take the free trial. Go to the Daniel Code website. There's a banner at the front of it saying free trial. Just click on that, register your username and password. Email the username, just the username, to Terry at support@thedanielcode.com. He will switch you on for your free trial, 31 days of everything we have at the website. He will also enable the Daniel Code library of studies for you, which will give you the retracements, the special Daniel Code stochastics, the momentum indicators, and everything else. And we can also organize a free trial to Trade Navigator of their charts and software, and you can have a look at that as well. Excuse my dogs barking. Someone just came to the door, and the dogs want them to know that they don't like him very much, so they're going to have a bark, but someone else will deal with that. Here's our compliance statement. Norbert, and only can, oh yes, Norbert, thank you, Norbert, saying he's doing or has done the free trial, can only recommend the free trial. He's very happy with that. That's great. This is our compliance statement, folks. Trading is risky. If you don't know how to trade, you're certain to lose your money. If you think you know how to trade and you haven't done a Danielcode tutorial, you're probably going to lose your money anyway. So don't lose your money. Come and see me and I'll teach you how to trade safely and profitably. Okay, that's the end of the slideshow, and let's get rid of that, and let's move on to what else we've got here. And this is what we want to see is our 6-day chart. Dollar SPX, dollar SPX, here we are. Yeah, okay, this is still generating interest, folks. This, as you know, let's bring this all in together. Here we are. This is the S&P index since the March 2009 crash low. You'll recall we had one close on February the 10th outside the 2 standard deviations from the mean. See how perfectly this market's being controlled by the Danielcode trading channel. And I said then the most likely option is that we get a great long consolidation, which we've certainly had that and a bit more as well. But what markets do when they fall out of the trading channel is they make every effort to regain, first of all, the bottom level, which is this bottom line here, now dotted. That's sitting at about 2148, about where the market is now, close enough. And then they attempt to regain the median, which is up here. Now, I know these are new highs, but when you look at markets this way, you get an entirely different view. The other market that a lot depends on is the US dollar index. And those of you who attend these tutorials will know that we've had it trapped since way back in January 2015 in this range from 93.39 up to 100.83 with just the one close outside 93.39 and this nice rally we're getting now, which is fairly bad news for gold because, of course, gold spends periods of time when it's inversely correlated to the US dollar. I've actually written an article about it. I know some people don't believe in that, but it has stages where it is correlated, it has stages where it's not correlated. Right now it's inversely correlated. So continued strengthening in the US dollar is not going to be great for gold. Let me show you the situation with gold. Here it is. This has been our weekly chart. Here we are. And we had this support running through here. It held this market for months and months. And this was the break. This is where the stops were. See what the note on this support for 3 months. This is where the swing traders have their stops. In other words, you can see this on daily charts and weekly charts. And it's now finding support around these numbers here. Nothing disastrous yet. Frank thinks this is going to rally. And we're going to have to do that. Just excuse me for a moment. Sorry about that, folks. I didn't have the phone switch through. And the young lady who's supposed to be answering it's apparently just stepped outside for a moment. Do excuse me. Yeah, nothing too much to learn from this, Boyd. What you did want to know, how do you know where the stops, traders have their stops? Come to tutorial, Albert, I'll teach you all of this. We always know where the stops are. Let's have a look at the website. The best way you can keep up to date on gold and the Huey is to go to the Danielcode website, which is here. I'm sure you all know it. And in here we have the fourth seal. We cover the DAX, the S&P, crude oil, natural gas, copper, T-bonds, the US dollar index, and the gold. There's very little difference between Huey and the gold analysis, Boyd, on a week-to-week basis. Where there is a difference, Frank will tell us. If you remember, I don't know if you do, but you come to most of the tutorials. We did a lot of work on Huey when he found the low exactly to the pretty much the day and the tick last year. Okay, so this is the fourth seal on gold. It's a forecasting method that we use. It's completely proprietary. I invented this about 7 or 8 years ago. It's pretty sensational, and Frank DB now helps me with this. He does most of the work on this, to be honest, and he's very, very good. Boy, you can see that on the 6-day chart, there's a 44 cycle that we're into now, and there's a 59 and a 62 cycle in the following period. On the 24-day chart, there's a stronger 59 cycle that's a way away yet. Now, have a look what this is. Frank writes this stuff for me, and he's a young Belgian gentleman. And I used to correct his writing because English is not his first language, but I don't do it anymore. So we just let him write whatever he likes. That's really is not in a English language contest. But just read this if you can't. If it's a bit small for you, let me read it for you. And he gives at the top of the paragraph, apart from the charts, he gives you a summary for where we were last time. It says the 59 cycle top of last week gave us a nice high. We should now be in a downtrend until the 44 cycle low that starts to bite on 10.7, or more likely even the 59.62 cluster cycle. Now they're time cycles, Norbert and Albert. They're Danielcode time cycles on the long-term charts, and that's be the cluster low running from October the 15th to October the 24th, when two cycles follow each other. The second one is usually the one that bites. That means there is a decent chance that gold is in a downtrend until the second half of October. See how it's spelt the European way? Okay, I think it's rather cool. Follow the DC daily website signals to handle or enter trades. The trend is down. Actually, Frank has been saying that for 2.5 weeks now. His current comment, nasty decline last week. Right. Not if you foresaw it. We've been warning for a downtrend for weeks now, and last week DC members booked huge profits on that. Gold reaffirmed its downtrend last week and rewarded the fourth seal analysis. The gold bugs don't need to worry, Boyd, because we are close to a higher degree bottom soon. There is a 44 cycle low running now until October the 14th, and a more important 59.62 cycle low starting to bite on October the 17th. This should give us the next swing low and the start of a higher degree rally. But don't get too bullish, folks. It says, I doubt this rally. I doubt this rally will make new highs for the year very soon. It may have a decent rally soon, but there is a high degree correction going on, and we have no longer term confirmation it is done yet. More on that as the rally starts and unfolds. For now, we first look for the formation of the swing low, probably on the 59.62 periods. They're the Danielcode time cycles, and the start of a long trade. Use the DC daily signals to get out of the shorts and into longs as the swing low comes. Okay, so there we are. Okay, so Boyd, you can pass that all on to Kurt. Look, I think he's a subscriber at the fourth seal. So he can see that there in gold. If he's not, we'd be happy for him to subscribe, or for you to subscribe. Anyone can subscribe. The more the merrier. It's wonderful. If you want to know what the markets are going to do in the future, this is about as good as forecasting gets. And don't forget to read Sir Isaac Newton's statement at the bottom of the page. Yes, very interesting. We always have that on the page. Okay, so I think that's probably about the important stuff, folks. The main thing is I wanted to show you how logical and simply these trades unfold if you know what to look for. If you didn't get all this lovely money in the last couple of weeks, I'm really sad, because, the richer you are, the longer you'll go on trading, and the more you'll learn, which is thrilling, really. It is. There's no other word for it. It's thrilling. It's a whole new language. Albert, can I mention the cost of the tutorial and video? Yeah, it's $7,500, and in the next few days, I'll be sending out the new syllabus. Albert, you'll get it if you're on our mailing list. If you're not on our mailing list, send me an email, please, so I can make sure that you get the new syllabus, which is not much different to the old syllabus, and covers all this sort of stuff we saw. Tom, you got it. This was for you mainly, mate. I wanted to make sure you understood this stuff. Kurt, I does get the force seal, was looking for Huey black lines. Oh, Boyd, Frank doesn't do that. I do that. Let me send you a Huey chart, mate. It's Friday lunchtime here. The noise you heard was the concrete guys. They were pouring a new concrete slab up here for a new studio for Mrs. Needham. But I'll be free this afternoon. I can send you that chart. Boyd, will that suit you? You'll get it to Kurt. I'll just send it to you. I can do you the Huey chart. You want what, daily, 6 day, 1 week? What do you want? Full meal deal. Wants everything, eh? Jesus, long time since you bought me a meal, mate. That's a long time. We need to see you down here again soon. Maybe I can work up the courage to get cold in Canada. All right, so that's about it, folks. I'll get that to you. Boyd, look, might take 24 hours, mate. And let me see who else has got questions. Tom, enjoy that. I hope you got all that, Tom. You're a member, so you can see it again with the recording anyway if you haven't. John had a couple of questions down in Coffs Harbour. The show there is on GBPG showing a 2-bar trailing stop. Actually carry the trading stop through a period when stock is below 20. You use a 2-bar trading stop into a 1-bar trading stop. John, if I've carried it too far, forgive me. Great description of the gold trade. Got that. Tim might come to a tutorial. Blah, 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 blah. Hey, nice to see so many of our good folk here today. I really miss you guys. We've had a lot of fun over the years, haven't we? Let's keep it going, folks. A lot of money coming next week. It's all going to be wild. It's on. Volatility is ramping up into the end of the year. I love it. Just loving some of these big trades. They have been fantastic. So thank you for being with me, folks, and I look forward to seeing you in a fortnight. That's 2 weeks. Some Americans don't use the expression fortnight. It's an old English expression. I don't know where I got it from, but it's very common in my family, a fortnight, 14 nights. If there's any huge drama happening, keep an eye on your emails. I'll put on a webinar at short notice if there's anything really exciting going to happen. Otherwise, just keep making the money and good trading. Okay. Nice to have you with us. Hey, thanks, Dex. Good to see you, my friend, Mr. Dex. Dex in particular, good. I hope you're still well and brain and mate. You're a wonderfully clever guy, Mr. Dex. He's a chartered accountant and a tax attorney. Very, very smart guy. Nice bloke. Enjoyed meeting all these clients. And Mr. Dex, you too. All right, folks, that's it for today. All the best. And I think it's Bloody Mary time for me, and the sun's shining, so must be sort of heading towards the pool and a drink. Of course, it's Friday afternoon here. You've still got work to do. My orders are already on. Okay, bye-bye.